Hello everyone. On this particular question, I was still looking at provision for bad debts, but it's kind of like including bad debts recovered and adjustment on the debtors control or debtors. Then you're given the amount of the increase in the provision for bad debts. So it's the same provision for bad debts, but with a number of parts that are involved in it. Let's look at the question. It says pre-adjustment trial balance on 28 February 2018. Debtors control is 161,000. Then provision for bad debts, and that should be the previous that you find in the trial balance, 2,140. Bad debts, right? That should be in the trial balance on the nominal account section, 8,640. Bad debts recovered, which is an income, right? That you find again on the nominal account section, right? 870. Then adjustments. A debtor Ms. Spark was declared insolvent. Received and recorded 450 as a first and final dividend of 40 cents in the rand, right? That's very important. The balance must still be written off. Right, let's calculate that. Right, so the 450, this 450 represents 40 cents in every rand that you owed. So, and the total was 450. That means we multiplied a certain number by 40 cents, then we got 450. So to get the amount that should be written off, remember 40 cents in every rand, that means 60 cents in every rand should be written off. So for us to calculate the 60 cents, the basically what to do, we say 60 over 40 multiplied by 450. That should give us the 60, the total of the 60 cents that needs to be written off. Right, this will give you that's 60 60 divided by 40 times 450. This will give us 675. Right, so that's the amount that needs to be written off. Or if you want, you can go the long way, calculate the total amount that it owed. To calculate the total amount, you're basically going to say 100 over 40 times 450. That will give you the total amount that Mr. Spark owed us. But it's not necessary if you can calculate the actual amount directly. So you don't need to do that, right? Then you subtract minus 450 and all that becomes long. The shortest way is just to go straight and calculate the amount that you're supposed to write off, right? Okay. Then on February 24 February 2018, 2,400 was received from Sequin. Right, there was amount received from Sequin. Right, how much? 2,400. Whose account had previously been written off, right, as irrecoverable, just like we're writing off 675 this. Then later on the person comes and pays off. Maybe they got money from somewhere or they are now solvent, then they want to sell to whoever they owe. The amount was entered in the debtors control column in the CRJ. These were now the knowledge of the journals in grade 10 comes in handy, right? If you know the debtors control column in the CRJ gets posted to the debtors ledger account, and at the same time get posted to the debtors control account on the credit side. That's by reducing the debtors. Right, but in this circumstance, it means you've reduced the debtors when you didn't want, you're not supposed to reduce them. That amount was not supposed to be entered in the debtors control. Right, I'll do the adjustment. Then the following credit note was issued to a customer. The credit note was omitted from the journal. Right. So there was 1,260 credit note issued to a customer. decrease the provision for bad debts by 230. The question here tells you, so we're not going to calculate the provision for bad debts, right? Just take into account, the adjustment that are here. So here we have two things that we need to write. So we have what we call other incomes, then normally you'll have rent income, then we have the amount here, then our bad debts recovered, that will be this amount here, 870 plus this amount here, right, that was paid by C Queen, right, supposed to be part of the bad debts recovered, right. Then we have decrease in provision for bad debts, right, is this amount 230, because the question says decrease the provision for bad debts by 230, so there's a decrease of 230, right. You don't need to calculate anything, that is straightforward. So that will be the thing that you need to write there. Then for bad debts, you go to other operating expenses, right. Then you have bad debts, right. We have a bad debts of 8,640, then plus the 675 here that we calculated, right. That will be your bad debt adjustment, right. I'm just doing these together so you see exactly what you are required to do. And this one will be 870 plus 2400 is 3270, right. Then you add this one, right. So that's the adjustment that you need to do. Then for debtors control now, remember, let me use a different color so you can for debtors control, it's not visible. Debtors control, it will be 161 plus, remember you're not supposed to deduct this amount, was deducted. So once it's posted on the CRJ column, on the debtors control column, the CRJ, that means it will reduce your debtors, and it wasn't supposed to be reduced. So plus 2,400, that will give you the correct amount of the debtors control. That means if you are going to be doing note number 6, yeah, trade and other receivables, no, not number 5, trade and other receivables, right, because number 4, it's inventory, then number 5, trade and other receivables, 6 is cash and cash equivalents, right. Okay, so that's what you need to do if you're going to be doing the trade and other receivables, right. You need to incorporate as well the provision for bad debts there to get your net debtors. So that's what you need to do. The key thing is just you're given the decrease, so you don't need to calculate anything, just supposed to enter the decrease as it is as other incomes. That's a decrease in provision for bad debts.